Hello and welcome to ESG Talk, your go-to source for insights and advice from leaders in environment, social, and governance. I'm your host, Mandi McReynolds. Today, we're joined by Allyson Anderson Book from Baker Hughes. Allyson is the Chief Sustainability Officer, where she leads the company's energy transition. Her leadership has helped Baker Hughes gain recognition on Newsweek's 2023 Most Trustworthy Companies in America list. Congratulations to you, Allyson, and your team for this incredible work and honor. Welcome to the show.
Well, thanks for having me here today. It's always great to come on and talk about where the world's headed in the world of sustainability. So. And for the acknowledgement on our hitting the trustworthy companies list, that was, I would say, one of the highlights for me in the time that I've had at Baker Hughes is that we've gotten to that point that we're actually being really transparent. So I think it's fantastic.
Transparency and trust is quite the journey. And I love that you started there, even as we get recognized. Sometimes people forget what the journey takes to get to that point. So let's dig in there, because you had set a net zero target by 2050 and an interim target by 50% emissions reduction by 2030. So to support these ambitious goals and robust frameworks, you demonstrated your sustainability really best in class ESG reporting, and that was supported by Workiva. So that's how you and I know each other. And now let's kind of dig in there. Where did you really start to build this best in class work? And how has that evolved over the years for you?
I've been with Baker Hughes about 3.5 years now. And sometimes I think I just got here. And then other times it feels like it was like 18 years. It's complicated math to get to the 18 years. Where we started was first taking stock as to the efforts that we had to date and what have we committed to first. Okay. So that tells you your minimum standard. Like we've got to at least say that we do that bit well in the data collection and showing our progress, right? And so for us, it was really because I was brought in to really help us build out the strategy on how we get to net zero as a company. It focused heavily on the emission side. And so Baker Hughes had been reporting its emissions for about 10 to 12 years by then to it was then called the Carbon Disclosure Project, but CDP today. And when I took a look at the emissions, I could tell that we were missing some data governance and fidelity, and potentially whole buckets of emissions weren't yet accounted for. And so since we had this net zero goal, I'm like, okay, let's back the truck up a little bit and let's dig a little bit deeper. And that actually led to a multiple year journey on saying, like, let's focus on inventory first, because even though we developed our net zero strategy in parallel, we had to think about what's the size, okay? And is this actually what we thought we were getting into when we made the goal? And so the long and short of it is, because we are pretty transparent here, is that first year we underreported by about 22%. And it wasn't due to anything that we were trying to hide. It's just, we just didn't yet have everything that we needed to go out there and get all the information and pull it in. So that's where we started. It was deeply in that space of, is this right? If we're going to hang a roadmap off of it, it's got to be right. And so that launched everything. And then where we went over the years is I suppose, worth spending a little bit more time in.
What I value there about your candor and transparency is people often forget that getting quality data to be decision useful and strategy useful is a multi-year journey. So oftentimes people want to get right away to that aspiration or right away to that ambition, and it takes time. And I also, as you get into this work, I always tell people too, remember, there are some standards still being written for different industries. And so you may underreport because working from home doesn't have a global standard yet. Or what you might find is you overreport because that's the data you can estimate at that time for the calculation. And I love that you talked about the adaptability, the refinement, but also the transparency. These things happen. That's why there's footnotes in reporting. That's why there's an acknowledgement in report. And that's why the best practice is to do it annually. So as you've, in your experience, experienced some of the work and the transition over 3 years, what do you think is the advantage, and how has that really strengthened the relationships with your stakeholders?
I would say it's that we can give investors a high degree of confidence that we don't have any surprises. And as regulators around the world are really waking up to this idea of requiring mandatory sustainability disclosures, not just emissions, we've got to be as tight to how we account, and that we have a high degree of data fidelity, accuracy, and clear governance structure to ensure that everything's in place, right? The advantage then is when you think about like pulling back a little bit, what poses a material risk to the company on the financial side? Well, if you made a net zero goal and you're a company like ours, which we were trying to really heavily get into that abatement part of the energy transition, it's really important to our company's value proposition that we're able to show that we can do that internally. Okay. And so we got to make sure that we walk our talk and that we are able to go out and then replicate that year over year for customers. All right. And so that advantage of what we're doing here is laying out a really firm foundation. And it took like twice as long as I thought initially to get it going. But that's because we were trying to figure out what the human capital part was as well. So it's not enough that you think I've got to go do the things. Most sustainability teams today are really quite small still, and then maybe they're being reskilled. So you've got to work in those constraints, and so all these things just take a bit.
And I think that's an interesting collide in the market. And you have the tech and the talent and the teachers and consultants. And I tell people you pull those levers at different times to help get you to the right operational status. And I think that will continue to evolve as teams upskill. The other part that I think is unique or interesting as you talk about stakeholders is we just had our task force and we did a reflection because we actually paused and we took a meeting and we talked about looking at our strategy or material issues 18 months in. Where did we play the strategy of sort of checkers, like the movement there of short-term targets? And where did we look at chess, this broader notion of targets? What I thought was interesting was all the executives, the highest posted note or a big conversation was, I love that we're walking our talk. And I think that's the part that we underscore is in transparency, in trust, how important that is to your internal team to see that and experience that. So I couldn't agree more with that statement. I'm curious, you mentioned as you're preparing, there's some regulation coming into play. What does that look like for you, and how are you grappling through the regulational landscape today?
So, we for a while were focused, like so many U.S. companies, on thinking about what's the SEC going to do, right? Because you're thinking like that's it. Like as long as we get that and we're compliant in the country in which we're traded, we're good. No, okay, we're not good because we operate in 89 plus countries, and so all those countries are also thinking like, the EU is doing this and the US is doing this, like we should think about this. And so now as countries are thinking about mirroring each other, we find ourselves in a position where we may have to then comply with slightly different standards in many different countries. And so the one that's top of mind for us and for most bigger, Fortune 500 publicly or FTSE companies is that within the EU, it's pretty serious what they passed in the reporting directive. I mean, it's seriously, I'm a former regulator, okay? And I will tell you, like, I used to have some of my colleagues who were like, wow, these are really serious regulations. But what we were requiring, while it was hard, did not have the economic impact that this kind of a rulemaking out of the EU does have. Okay, so when we did a comparative analysis between where we're at today, Mandi, and where the directive, and this is without the member state guidance, like the country level, we counted about 1,100 metrics. Today, we have information governance that's analogous in the US to something like SOX level or like under the current GAAP standard, what you would do for financial reporting. And so we have that over, 250 metrics. And we're like fairly advanced, okay? And we know that we are fairly advanced in how we've had a very systematic approach to layering governance controls, sharing, and all of that stuff. And like, I can't imagine what other companies are thinking when they see that if they're just getting started. So the single greatest challenge then is knowing that we're ahead, making sure that people understand even internally. That doesn't mean we're going to get to where we need to be in 2 years. And I think for listeners of this podcast, the important takeaway is it's not enough that you're reporting on a certain thing and having governance. You also have to have your third party independent verification. So you've got to transform what used to be this, it's a very financially driven data ecosystem into something that includes all of these disparate pieces of data that don't even have system of record keeping behind it. So now you're going to have to build that too. Okay, so the more complex your company is, the harder that is to do. And so we've been building that out bit by bit because for the size of us and all the legal entities, it's not going to be clean. Okay, so I gave you kind of a long answer, but what a journey to go on. And, we still got a long ways to go, but for everybody else just getting started, the key message for the entire podcast is don't wait. If you've got to do it, don't wait. This one's hard, guys. This one's really difficult.
Well, and I think that the CSRD, the regulation that you were talking about, I was just on a panel recently, and I was shocked because it was a lot of ESG people who were transitioning, upskilling from primarily social roles or e-roles into a broader role and getting ready for this change, this evolution in the field. And you asked the question in the room, how many of you are multinational? 60 room full. It was supposed to be like a smaller session. We had to like bring a few more chairs in. And 90% of the hands went up, and they have their US headquartered, but have global presence. And I think this is very telling that just because you're not headquartered, you still have to abide by the new global regulations and standards. And it is that work to get ahead. And the three things that I tell people is exactly what you said: partners. It might be your internal audit team, it might be your external advisory group, or looking at those who are supporting you in your finance that understand the rigor that needs to go into this. It may be partners in your ecosystem. If you're looking at impact, because you're going to have to show double materiality. Policy, like participate, provide feedback in the policies that are happening. And then pilots. I love where you went. People are trying to attack it all, and you've got to start small, scale from there. Our own Workiva journey is we're working on emissions first. We're working on governance and our strategy of that, the whole ESG goes, and then we're scaling to some of the other elements over the course of time. Pilots are perfectly good. So congratulations, talking through all this work. You have finally released the report. You got the report out, which is a huge lift to do in Q1 and Q2 for organizations. Which new components of the report did you find most exciting?
Well, I think every year is just the journey. Okay, for one, is exciting. All right, because we layer stuff every year, like what you just were talking about on pilots. Every year we go in and I'm like, okay, this year we're going to turn this on, because you don't want to disrupt the annual production of things so much so that suddenly you're putting it out and it took you 8 months. Like then it's kind of pointless of that. So we turn on things every year. And so this year we continued to, I get excited about things, frankly, that are pretty nerdy, Mandi. And so, because I'm writing it all the time, but I would say that the nerdy bit is we expanded the amount of the planet data to third-party verification by our independent auditor. And so we're nearly at 100% completion finally. And now we've got 2/3 of our data under independent verification. And just for anybody listening, I'm always excited that all of our emissions data goes through the highest level of assurance by both internal audit and reasonable assurance by KPMG for scope 1 and 2 emissions. And so that's pretty exciting. The other part, okay, now if you read our report, you would never be able to pick this up, is that we went to a fully kind of automated solution that actually pushes up into the backside of Workiva, yes, as a part of our pilot together. And that was really exciting. And so we did something, and it was kind of by the skin of our teeth because we were turning this on over time, but we had just gone through, gotten all of that back end record keeping, everything done in time to do the end of the year close on emissions using our automation and then pushing it into Workiva. And that was audited, and we got it back and did it again a second time. And that's what you see in our numbers this year. And I got to tell you, we had a lower number of findings. We had a much stronger ability to close it out. I mean, I'm so excited. That was great. On performance, that's a whole other thing, okay, because we continue to advance our energy transition journey in a really positive way. And so continue to see deeper emissions reductions. We're almost 30% of the way there to the 50% mark. And so we're right on track to where we need to be for that. And then the other piece is as you look at our performance in social and governance, we had some warts, I'll just say. We had some parts that were less awesome. And what was so good this year is that we're finally able to articulate where we're focused strategically to really move the needle on how we think about people more sustainably. That is so important. And making sure that it isn't just about diversity, it's also about inclusion and other aspects. And so if you turn the page into the report, you'll see we articulate what we think entails sustainable for people, planet, and principles, and how we're going to get there in our progress. So that even if it was a little wordy, you'll see that we have the clear way that we're going to advance progress towards becoming sustainable. That's new.
I love that. I think that's resonating around the globe. Best in class looks like a movement away from perfection. And I think it's a movement towards the transparency and trust needed as the license to operate. People have asked a lot about, do you care about greenwashing or purpose washing? And I was like, I don't think people intentionally went out and tried to do that. I think people were very good practitioners. I have a lot of faith in colleagues like ourselves in the field. I think it's pushed this idea of, but I can not be glossy. I can admit what you just said, my warts. And I'm seeing best in class now look like more of a reality check that we see in earnings. You acknowledge what went well. Yeah. You acknowledge the number you didn't make, and you freaking tell the street what you did and what you're doing to, get back on course. It's That's not exactly that right. hard. We do it in finance, and I love that you and others are leading the way on how we acknowledge that in the same way. So as we wrap up this episode, it's been a powerhouse time together, Allyson. What's one takeaway related to reporting that you would offer up to myself and others like us that our sustainability team should be thinking about?
I would remind people that there's a lot of times there's this, I'm thinking, I won't say adversarial role, but people are a little bit leery about having a lot of board engagement, okay? And it's sort of like exposing your operations and trusting that your board has your back and your best interest. And I will say, like, one of the single greatest areas of strength that we have as a company is that our board has gone through a bit of an educational process as we have, okay? And they've been there every step of the way. I mean, we've got a couple of very strong board members in this area who have, and frankly, one was the one who looked at me my first year and said, Allyson, you have to own the words too, okay? And like that moment of truth with her was so incredible for me. And so to have that trust in that earnest conversation with our board and have their support is great. So lean into the strength of having a really amazing and capable board for anybody who's in a publicly traded company. It is so important. Okay. Don't fear that. Embrace it. It's only going to make you stronger and help reduce your risk in the company. The more questions they ask, the better you are as a company.
I love it. No, and I think you're exactly. And boards are changing. Boards are changing to assess members who have environment, social governance changes. Boards are changing to embrace it across the different committees where they have accountability. And I think you're right. It's nothing to fear. And by the way, if you're going to your first board meeting, people like us, we start somewhere. You start somewhere in a boardroom, and you know, write down the lessons learned. It's like any other part of the job. And if you're great at stakeholder engagement, with most of us are, just a different group of stakeholders that you're now engaging with. So love that as our closeout and takeaway. Allyson, thanks so much for being with us today. What a privilege. And to our audience, thank you again for joining us in this episode of ESG Talk, brought to you by Workiva, the world's only unified platform for financial reporting, ESG, audit, and risk. If you enjoyed this episode, please rate and review us on Apple Podcasts. Subscribe to see future episodes on Apple, Spotify, or YouTube. We'll talk real soon.